Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. A mixed day of trading both grain and livestock futures on Thursday. And Scott, let's start off talking about the grain sector. Corn market, 8 straight day down here. Obviously, the funds continue to sell here, but how much more downside risk do you think there is?
We're getting close to some support where it has to decide whether it's going to turn around. So we've had the swift breaks since we've been to 560, and now we're gearing up. We've had a little gap measurement that's going to measure down to 477 for a support there, and that lines right up with the 481, the most recent low that we've had in the D's corn. So there's going to be a lot of eyes watching that to decide if we're going to have some support, if we're going to find it, or the fund's going to keep selling. That's where we're targeting, and we're getting ever so close now. Then we're going to have to turn the page. I mean, it's been a wild weather market season, and what's going to provide the support to bounce it off of those levels as we have the crop that we're going to have almost as you get closer to the middle of August. One more rain would sure help us out. We've got that in the forecast that kind of finish things off, finish filling out some of these years, but then we're going to have to rely on the demand and the dollar and exports, and those stories have not been there for the corn to stand up on. So it'll be a very pivotal moment if we're going to hold those that 481, 477 kind of number to find any boost from there. Do the funds stay short, or are we going to take that out and head significantly lower from there?
So soybeans bounced on Thursday, and of course, we kind of held support that we needed to hold here. Will we continue to hold that, you think, unless these rains verify that are in the extended forecast?
Soybeans still have that August moisture risk. So we've got moisture in the forecast, but we've sure been coming into August a little bit hotter, a little bit drier. It's been promise of cooler and wetter, which has probably been part of this recent break in the soybeans. But if some of these rains don't materialize, I would say that the fund's going to defend their long position, and we could see a boost in the soybeans. So they still get a little bit of fun yet with this weather market. If you're not sick of it yet, you got a little time yet. I guess myself, I'm ready to move on from them, but there's still some support here at this 32% retracement. To me, it's not a real strong line of support. You're going to be more in the just below 13s before you're going to find some more significant technical support, in my opinion. But we're going to be watching these rains close if they materialize or not.
Yeah. And more China export business this morning, but we need a lot more to catch up, don't we?
Yeah, we need some to catch up. But what I do like is that we are more competitive with world prices right now. So, I mean, that's been, it feels like it's been a while since I've been able to say that. So I still think that there could be a little bit of a desire for some of our soybeans, and the priced against some of the rest of the world. I like what I see there. If we got a little bit of a break in the US dollar, that would really put a nice shot in the arm there. But yeah, we're still behind and need a little more.
Yeah, the dollar has kind of creeped back up here, and that has certainly hurt the grain market, especially corn and wheat. Okay, let's talk about cattle. Nice recovery today after kind of getting pushed down yesterday by some of these macroeconomic fears.
Yes, a few different fears there. Macroeconomics is one, as you mentioned. To me, it feels like this economy is in a tougher spot. We've got some of these markets trading at high levels, but the risk is starting to feel pretty real with higher interest rates. Who's going to be able to afford to build a home or buy a home? We've got energy prices surging again. So eventually, I wonder if that doesn't start to catch up with the consumer just a little bit. So always keeping an eye on that and feeling a little bit of fear in that sector. But cattle alone, they always have been able to find a way back and fight their ways. We're sitting here in the beginning of August, and we're hanging on through the summer better than expected. We're up still near contract highs, and this is usually a time of year we're putting in a little bit of a low. So the cash market been staying pretty strong. Anytime the packers are trying to pull the cash prices back, it's just crickets. There's not trade happening. They do have to raise prices. Some of the regional bids in the north started at 186, then to 187, and then you hear a rumor, okay, maybe a little bit of 188 might have happened. feed yards are current, they're willing to say that they want to ask more, even though they can turn a good $400, $500 a head on these prices on these cattle. Great profits to be had, but how are you going to refill that pen? That's been a real struggle. The feeder calf prices are high, and they should be very warranted that they are. So they're more apt to say, hey, I'm going to try to get a higher price out of these, and I might just put a few more days on them. The more days hasn't showed up in, say, the grading category yet. We don't have a overabundance of choice beef. The choice select spread hasn't narrowed enough to say that that's the case, but that's something to keep an eye on in the long run here.
Yeah. So the cash market on the feeder side of things, is it still as hot as it was or not?
I keep still hearing high prices, and it's usually every August. It's just a normal theme that I get to talk to my customers, and we talk about how high feeders are. So we're just ahead of the northern runs, and we do have, a lot more moisture in the Dakotas. So yearlings coming off of grass, they had enough feed. They didn't have to pull them early. So the prices are going to stay pretty smoky. And you do see quite a variety of prices this time of year. One hand, they're saying this group is how high this one sold and this one pulled back. Yeah. If you've got quality cattle, it's going to bring a high price, and it's going to be an amazing price. So still seeing the desire, I want cattle, and some of these guys are going to have a hard time staying empty. But if you can sit on your hands just a little bit in the month of August and wait for September, you can usually find a few more to choose from, or you can shop around just a little bit better.
Gotcha. What about the hog market? A pretty tough down day here today. Is this topping action, do you think?
It feels like it, looks like it. The technical analysis looks pretty rough. Charts are not looking very pretty. You get a gap lower, and you're breaking out of some of these sideways ranges. The deferred markets have already broke out of their ranges, and it feels like the fronts could see that as well. So technicals not helping. Even throughout the day, not able to try to recover off the lows. It just drives into further lows. So it's one of those long days of just dragging into new lows throughout. That's usually a pretty tough sign to try to overcome. And cash maybe drying up just a little bit. You're maybe starting to feel some of the consequences of Prop 12 and a lot of confusion on how that is affecting the market yet. But this could be one of the first signs that this is making an impact on the pork demand, and the uncertainty is what is always bearish. Uncertainty is bearish, and so that's where the market can drive a little bit lower, and the supply feels to be picking up. You can find, the way I heard it, you can find all the 40-pound feeder pigs for $40 that you can find. So they're out there. There's a supply to be had. So I think the futures market can take note of that too.
Yeah, and I saw ISO weans were like under $10. That's not good.
No, it's not.
Okay, well, we'll see. The fun's still pretty long in this hog market, and we'll see if they want to take some profits on that or some of these cattle hog spreads, I suppose.
Yep, they have been. Cattle hog spreads have been more active this year than I would say in the last few. So that definitely could matter as we see a shift where the hogs finally give up, breaking trend lines, breaking ranges. That could scare some of those funds out of some of those longs.
Okay, thanks for joining us. That is Scott Varilek with Kooima Kooima Varilek here on Markets Now.